Welcome to this explainer. Okay, if you're processing payments through Stripe and managing your books in QuickBooks Online, you already know the feeling. That sheer panic of a month-end mismatch. Well, today, we're going to ditch that frustration completely. We're diving into a really calm, super practical workflow to get those payouts perfectly reconciled every single time. So here's our agenda for today. First, we'll look at the payout mismatch problem. Then, the anatomy of a Stripe payout. Third, the clearing account workflow. Fourth, automating with PayTracker. And finally, the 5-step reconciliation flow. All right, jumping right into section 1, the payout mismatch problem. If you're in the Stripe and QBO ecosystem, you've definitely hit this wall. You're looking at your screen and your sales data just outright refuses to match your bank feed. It's like on one side, Stripe is showing this nice big gross sales number. But then on the other side, your bank account shows a totally different, much smaller deposit. And right there in the middle is QuickBooks basically looking at you, waiting for an explanation. Moving on to section 2, anatomy of a Stripe payout. You know, to understand why this mismatch is actually totally normal, we've got to look at what makes up that final transfer. So let's say a customer pays exactly $100 for an order, right? At first glance, boom, you see $100 and top-line sales. But here's the catch. That $100 shrinks before it ever actually hits your bank account. Why? Well, Stripe takes its processing fees right off the top, or maybe a customer refund happened in that exact same time window, or, as is usually the case, multiple different payments get bundled together into one big transfer that gets hit with a timing delay, so it lands in your bank days later. It's like a giant puzzle. So here is the absolute golden rule. You have to track the full flow. Do not just force a bank match. I mean it. If you only record that final bank deposit, your overall sales are going to be understated. And if you ignore those processing fees, your expenses are totally off. Capturing the entire journey, the whole shebang, is literally the only way to keep your books bulletproof. Which brings us nicely to section 3, the clearing account workflow. Now, you could try doing this all manually, pulling apart the sales, fees, and refunds for every single payout. But let's be real, that is painfully slow and super error-prone. One missed fee and your expenses are a mess. So instead, we use a clearing account. Think of this as a temporary staging area or a waiting room in QuickBooks. Your payments and fees sit there, get perfectly separated out before the final clean amount actually transfers to your real bank account. It creates this beautifully clean timeline. Watch this. Step 1, the customer payment goes into the clearing account. Step 2, Stripe's fee comes out. Step 3, any refunds get recorded. And then step 4, that final payout is logged as a neat, perfectly balanced transfer from the clearing account right into your real bank. Honestly, it takes all the guesswork out of it. Okay, section 4, automating with PayTracker. So while the clearing account is the absolute correct way to handle the accounting logic, doing it by hand for hundreds of transactions is, well, it's a nightmare. That's exactly where a tool like PayTracker comes in handy. It essentially gives you 2 paths, depending on your bookkeeping style. You've got Itemized Sync, which gives you that super granular transaction-level detail, or you can use Summary Sync, which groups all that activity into nice, compact entries so your high-volume books stay totally uncluttered. But it goes way beyond just shoveling data around. It intelligently applies payments to your matching open invoices, it catches and flags duplicates before they mess up your ledger, and this is a real game changer. It gives you a safe rollback option. So actually, if you ever make a mistake during setup, you can just hit undo and reverse it instantly. No more spending hours deleting manual entries one by one. Bringing us to our final section, section 5, the 5-step reconciliation flow. It all breaks down into these 5 super clear steps. 1, connect your Stripe and QBO accounts. 2, map your activity so payments, fees, and refunds land in the right ledger accounts. 3, pick your posting method, that itemized or summary sync we just talked about. 4, just let the data sync up so your clearing account populates. And 5, easily match that payout deposit right in your QuickBooks bank feed. Simple as that. But listen, during that final step, you absolutely have to remember this crucial rule. Do not simply add the bank deposit as new income. Seriously, if your Stripe sales have already been synced into your system, just clicking Add on the bank feed is gonna duplicate your revenue. It will turn your month-end reconciliation into an absolute disaster. Always, always match, never just add. Ultimately, the whole goal of this process boils down to this really great concept. The Stripe payment activity explains the sales, and the bank feed deposit can be matched instead of guessed. By structuring your flow this way, you transition completely away from guessing what some random deposit means to simply confirming the truth that's already in your books. So, as we wrap up this explainer, I really want you to take a hard look at your current bookkeeping setup and ask yourself, are your Stripe, QuickBooks Online, and bank deposits aligned enough to completely trust your payment data? Because by tracking the full flow, using a clearing account, and leaning into a bit of automation, you can actually ensure your systems are giving you perfectly clean, trustworthy books. So, are your numbers telling you the whole truth? Something to think about as you get back to reconciling.